I'm back for the final Earnings All Stars video for this earnings season. I know you're going to miss me when I'm gone, but this is a hot week. We're going to have NVIDIA and several other important tech names and a lot of the niche retailers. And we're going to be watching those for tariff issues and what's going on with the consumer. It's been better than we thought, even while tariffs are playing a factor. The consumer is holding up apparently better than we anticipated, but some of that is at the big retailers like Walmart and even Home Depot. But what are they doing with apparel and furniture and beauty? So I'm bringing you those stocks this week because we're about to find out. So let's dive right in. Okay, we're starting with Williams and Sonoma. I haven't covered them in a while. Maybe because furniture is kind of down on its luck because of what's happening in the housing industry, the lower sales. When you get a hot housing market, not only do you buy the house and paint it and do things like that, but you usually buy furniture. And now the home sales have been depressed the last couple of years, even now that the Fed has raised rates and we have the higher mortgage rates. So that's really been impacting furniture. Although Williams and Sonoma does have a business side of the business, which has been performing pretty well. So that's at like hotels, restaurants, even some commercial spaces, for offices, things like that. But is it enough? And what is happening at West Elm, Pottery Barn, Williams and Sonoma itself? There's just a lot going on at Williams and Sonoma. But we also have this issue with the tariffs. It's not just the normal tariffs anymore. Apparently, we are going to get a special tariff on furniture, and it's coming on October 11th. They haven't said what it is yet. It will not be stacked on top of the existing tariffs, apparently. So that's good news, but it's going to be higher than the existing tariff, right? So that's not good news. So for instance, Williams and Sonoma does source some furniture in Vietnam. It's 20% right now. What is it going to be coming out of Vietnam or anywhere else that they source? Because it's going to be the same, it sounds like, no matter where they're sourcing from. And what type of furniture is this going to apply to? Probably not accessories, but the actual physical furniture itself. We don't know, and they won't know yet on this call either. But I'm tuning in to find out how the rest of the business is doing and how it is adjusting to the tariffs in place right now, because those have to be impacting at some point. So Williams and Sonoma, bringing it up on the chart, you can see it's in number 2. And then you can see value, growth, not so great. It does have an A for momentum because it is trying to get back to those highs. So this has been one of the standout of the furniture retailers. And you can see why on the earnings side, it only has this one miss in the last 5 years. And it was very small, just 1.6% really going back to 2022. And then they have been doing it. Last quarter, 5.1%. But look at the earnings. They have rebounded and have been moving higher, but a little bit of unknowns here in 2025. But we are getting big, distance in between these two numbers. So that's nice earnings growth. And then 2027 looks like a little bit more growth still to come there. So these are all factors I'm going to be watching on Williams and Sonoma, and you should be too. Very timely to get this report. WSM is this ticker. Okay, then let's turn to clothing. Abercrombie and Fitch, it was one of the hottest retailers. Now a Zacks number 3 going into the number, but A for value, it's always been cheap. C for growth now, and C for momentum. What's happening on this one? Oh, I haven't looked at this chart in a while. Okay, so you can see the huge growth off of those lows in 2022 into 2023. A lot of this was because they were able to turn it around. They started offering dresses for women. That took off. Men's suits, people were wearing all these outfits to weddings, which we could finally go to again. And they did this bridal shop and vacation shop within the stores. So the brand was hot again. A lot of people shopping there, even up into their 40s, were shopping at Abercrombie. But then we had Liberation Day, worries about the tariffs. It's come off of that, especially in recent weeks. And we've gotten a couple of earnings in here and earnings surprises. So the last one pretty big at 17.7%, but everybody is just concerned about what is going to happen with the tariffs and the kind of hit they're going to see. And you can see the earnings all bunched up in here, and then they have cut. I'm just kind of curious on this one, what is happening with those earnings. Let's take a little bit closer look just to see, because it looks like there might have been some cuts. Yeah. So this quarter, not so bad. We've had two that have risen the last 30 days going into it, and nobody's cutting. So that's a good sign. We did have one higher in the last 30 days, but also one cut for the full year. So this is just a matter of the analysts aren't super bearish here. I wouldn't call them that, but a little bit of uncertainty going into it, except for this quarter where they're feeling a little bit better, 2-cent gain on the earnings there. So let's see what happens here. How cheap is it? It was at single digits. It still is 9.6 times, but nobody really wants to touch the apparel retailers right here. They are the most exposed because they are sourcing mostly outside of the U.S. So this is Abercrombie & Fitch, ANF. Let's switch over to tech now, and we're going to do CrowdStrike. So we're going to get some more cybersecurity. CrowdStrike used to be big fan favorite. It's number 3. Got that F for value, not surprising, but the B for growth. That's what I would expect with a stock like CrowdStrike. And then look at its earnings surprise track record. It is an all-star, not a single miss, going all the way back to the pandemic times, although last quarter, a little bit smaller arrow, but still 10.6% beat there. But we are off the all-time highs here, pulling back. Maybe this has been on valuation a bit. Yeah, it's 120 times on the PE. PEG is very stretched too at 5.3. And we're supposed to see an earnings decline here for this year and then another rebound. So you're paying a pretty high price, at least on the PE and the PEG. But I know what you're saying. Tracy, nobody cares about PE with tech stocks. Let's look and just see what the price to sales ratio is. Remember, over 10 means it's pretty stretched, even for technology. And we're looking at 25. So yeah, this is pretty pricey, but it's in a hot area. Cybersecurity, I never bet against that area. So let's see what happens. CrowdStrike, CR. Then we're going to switch back over to beauty. It's one I've owned in my own portfolio for over a decade. Ulta Beauty, it's had its ups and downs. It now has a new CEO, and it's recovered a bit. It is number 3, and you can see the growth has gotten a bit better with the B. It's not that cheap, C for value, but B overall. And it has pretty good earnings surprise track record, just this one miss back here in 2024. Although pretty small arrows, but last quarter, 16.1%. So I'm liking that. Will it test these highs? It's tested it twice here before retreating, and growth has slowed. There has been no doubt about that. And now we do have tariff impacts. We know from e.l.f. Beauty and from Estee Lauder that there has been tariff issues with a lot of the products that are made overseas. So how much will Ulta Beauty be, impacted by that? Or is it just going to be rising prices itself on the products? We'll find out, but pretty good track record. And you can see the increase in the earnings with this one. And that's what we also like to see, because then it will get cheaper. But forward P still at 22.5, was cheaper back in the day when I bought it. PEG isn't that cheap either at 3.19. And then you can see this year's earnings, a decline there. Not surprising given what's been happening, but is the consumer still going to dive in? Are they still willing to pay just a little bit more for some beauty products? I'm betting that they are, and so is the street, because we have nice earnings growth for next year. Will this hold? I don't know. And we are heading into the holiday season, so this is going to be an interesting one. Ulta Beauty, ULTA. Then we're going to wrap it up finally with another tech stock, even though there's some other retailers reporting this week, including the Gap, Dollar General. I think Urban Outfitters is going as well, but I'm going back to tech with Dell, one of the original tech titans back in the 1990s. It's a number 2. It is an AI play. It is in this story. And you can see the nice A for growth here. We've got the A for momentum, a B for value. We still got some value with Dell. And we got the A overall. So overall, Dell, this is looking good on the rank and the scores. And then scrolling down, we did miss last quarter, 9.8% miss. Didn't really stop the shares here. A little bit of a pullback, and then they were rallying again. Not near these all-time highs in 2024 just yet. But this earnings looks a little interesting here. A little bit of a dip around Liberation Day, but the analysts are back to being a little more bullish now. And you can see we've got 16.6% earnings growth expected for this year, and then similar for next year. That's very nice earnings growth, maybe not your usual tech like we've seen with NVIDIA or even when CrowdStrike rebounds. But neither of them have a forward P of just 13.8 here, or a PEG ratio under 1, both which indicate value, like classic value. So I'm going to be keeping an eye on Dell, ticker DELL, of course, along with all the other names I mentioned. And we're going to get Snowflake on the tech side. We're going to get Marvell, but a lot going on this week. It's not just NVIDIA, but I'll be tweeting out all of these charts and more all week long. You'll want to tune in because it does get real quiet after this. This is my last video for this earnings season, as I mentioned earlier, and we're going out with a bang with some very hot stocks. So be sure to subscribe to our YouTube channel so you can get our top stock picks of the day, which give you stock picks every week. So you have something to watch until I return again in a couple of months with the third quarter earnings season. It will be here before we know it, and I'll be back. But until then, I'll see you on the other side. It'll be fall and beautiful, and I'll check in then.